Hello, everyone. Good afternoon, and welcome to a midday market update for Wednesday, March the 1st of 2017. This is George Papazov, founder, owner here, and head trader at TRADEPRO Academy. I want to say welcome to today's broadcast. We got a lot of stuff to cover. We've had a busy start to the morning. We've had a really strong and pumped up market rally here. You can see it just continues higher. In the morning I tried to fade a little bit of this price action, but then slowly decided to not do that. I decided better and thought against that. And there it is. It just continues to rip. We'll talk about why it's continuing to rip. I think today we hit 2,400 or at least 2399.75 on the futures. Why? Because that's how cruel the market is. All right, I'll take you through a lot of analysis today, a lot of perspective, a lot of trade ideas, and if something happens great here for us, and we'll even trade it live. That's kind of what we do. But first, I want to make a big announcement, and I want to share this with you guys, and you're going to be invited to something big. We're about to change the industry for good. And at TRADEPRO Academy, the vision here has always been to empower retail traders how to have a level playing field with the professionals, and especially in this automated algorithmic environment. Okay, so really that's what we've been focusing on for the last few years, last few months, most specifically with our new course. We're about to change the industry. We're about to change the game. I'm waiting for legal approval to go ahead with this. You have not seen anything like this anywhere else. When it drops, it's going to catch the industry off guard. I guarantee it. And it's going to prove who the guys are that trade and the guys that don't. And I'm going to tell you who I am and what I am, and the people in our trading room will tell you the same. Now, I want to tell you about it. I can't. It's going to be massive. It's going to be a game changer. We're going to look for a late March launch. I'm working on a lot of stuff behind the scenes. It's coming. You guys need to sign up to get more information. And out of this, the benefit for you is you're going to have the opportunity of a lifetime. I'm going to offer something that I will never offer again, and it will only increase from there. So we're going to have a pricing plan change, but if you get in before the lock, you could be grandfathered in for all eternity. So you have one last shot to get in on the current pricing structure before we get on board with some new stuff. And there's going to be a lot of changes. So not only is the price going to be the same, you're going to get more value. That's what we're working to provide and deliver. So I want you guys to be aware of that. To get on the list, and again, I'm not doing this ever again. I'm just going to restructure this, and we're going to go onward and upward. To get on the list, you got to go to tradeproacademy.com/free trial. Okay, that will put you on our email list, and you'll be told about changes as they come up. We'll send you a lot of emails, give you a lot of notice. It's going to lead up to a grand launch webinar, and then we're going to actually drop the news right there, and it's big news, and I can't wait. Bigger than the market rally, asked Anatoly. I don't know, Anatoly. We'll decide. You could tell me that once I release it. All right, so that's what I wanted to start off with. A second piece of info I want to give you. We just did a great interview with one of our friends here, Trent. He runs drinkforex.com. He does interviews with traders, and it's a podcast style conversational interview. If you want to learn a little bit about my approach, about what we do, and if you just want to listen to two traders going at it and have some banter, have some fun and good discussion, I highly recommend it. Go to drinkforex.com. It's on our website at the moment, or click the link below. I'll add it into YouTube. I had a blast doing the interview with him on the podcast. We did it last Friday. So I sat here and I watched the market rip higher into the close. I'm sitting here doing a podcast interview, and I joked at one point, hey, I'm going to actually do a trade during this interview, but obviously I didn't. It wouldn't have been wise to do that. All right, so that being aside, we got a massive launch, tradeproacademy.com/free trial. It's coming end of March. It's going to be an industry changer. I can guarantee it. Waiting for the legal okay, but we're going to work up to it to the end of March. And check out the interview. Now let's look at the markets. Let's go in here and talk about what's going on. What the heck is going on in this equity market? Like it or not, Donald Trump had a great address to Congress yesterday. It was good. It was positive. He struck a different chord. He struck a different tone. I don't care if you support the guy or not. He came out more mature. He came out more honed, more polished, more presidential. The market liked that. I got to tell you, when I was watching Congress and we're trading live in our room, I mentioned several times, and that's archived, by the way. If you join in as a member, that's archived in the room. But we mentioned several times, wow, even Democrats are standing up to clap for the guy. And he had a good speech. 3 out of 4 Americans approved of his congressional testimony yesterday based on polls, which means that's good. He got 50% of the vote, not quite 50 of the popular vote, but close enough. Now 3/4 approve of this congressional address. So They're warming up to him. All right. They're warming up to Trump. All right. They're warming up to the idea of taxation overhaul. They're warming up to what he's talking about. And the equity market is just absolutely ripping. I can tell you in the last little bit, there were a lot of traders trying to get short this thing around these 2360s. All right. I was worried because volume was declining on the buy side, but I said numerous times, watch these 2360s on the equity market because they keep getting bought into. When you start to get little tails like that, and then they close back at where they opened, that's a real big sign of bullishness. That's a sign that shorts are getting squeezed out. But more importantly, at this level, they're shorts accumulating. Let's call this SA. Shorts are accumulating. Take them above these 70s, what happens? The shorts are getting squeezed. All day long today, I started trying to fade the S&P 500. My first two trades were sell-offs into this rally. All right, because I'm not a guy that could just blindly buy this thing and close my eyes because I'm actually a trader. I've lived through an environment like this a few times, and I've lived through an environment where it went like this a few times. And I can tell you just blindly buying will get you slaughtered eventually. Okay, you might be the sheep that gets led to the slaughterhouse at the end and not even know it. That's the problem with just buying it. That's why I'm so anxious and I have anxiety about just buying and holding like that, because that is the most dangerous trade at the end of the day. And if you don't realize that, then we maybe have some more stuff to teach you at TRADEPRO Academy. But these tails that are coming down into these 60s, they got bid right back up. They found buyers. Shorts got squeezed. Now shorts got pinched on the upside. Everyone's rushing in. Shorts are chasing the price higher and higher to buy back their positions. Longs are getting long. Buy stops are getting triggered for a breakout trade. Everyone's buying. Okay. That being said, I think 99.75 is the level I'm going for on the ES futures. I have posted 10 offers at 99.75. Sorry, 5 offers at 99.75 and 5 at evens. I'm looking to get short 10 lots here on that price. That's a great opportunity up there. Until it gets there, I'm just going to sit on my hands and do nothing. Okay, the market is ripping. Let's face it. Looking at a breakdown of which markets are participating, S&P 500 is the most excited and riled up. Dow passes another landstone or landmark today, 21K. So Dow went from 20 to 21K in a number of days, in two and a half weeks. Phenomenal rally. Great run up to the upside. NASDAQ breaks out its high as well. It was more into consolidation formation. Now it's broken out. And I think that the true distinguished market here of all of them is how impressive Russell's come out of the gate today. Russell is confirming this upside sequence. No matter how you look at it, there's money piling into equity. And it's not just U.S. fund managers. It's all international and abroad. You got the international guys jumping in, dumping money into the U.S. and into the dollar. And I'll tell you why the dollar in a second. All right. Russell, however, jumping on board. That's very impressive. Let's look at market breadth, though, because market breadth often tells a different story. Well, you can see SPY, S&P 500 index rallied higher. Market breadth has not exploded to a new high yet on the percentage of stocks above their 50-day moving average. What does this mean? This means the market's hitting new highs, but there isn't as many stocks participating. It's driven by just a few of them here and there. It's not a broad-based rally because market breadth has not increased. The percentage of stocks that have gone above their 50-day moving average have not jumped. They're still at this high. Now, the percentage of stocks above their 100-day moving average continues to rocket higher, and we're about to run dead smack into some overhead resistance at 82.5. So you better be following these indicators, market breadth. If you actually go to tradeproacademy.com/free trial, when you sign up, you're going to get an email with 3 secret indicators that I call them that I use to make a lot of my money. This is one of them, all right, for a longer term trend. This is one of them right here. I'll tell you how to use it, what it means, and how to incorporate it into your trading plan. Whether you're short-term or long-term trader, it doesn't matter. You got to follow this. It's about to run dead smack some overhead resistance. Can it go higher? Yeah, it sure can. Okay, and I know on these webinars, on these YouTube lives that I broadcast, I've said before, hey, look, you know what? The upside looks a little frothy. We might be coming in for a bit of sell-off. That doesn't mean I'm short and keep shorting. That means, hey, you know what? We tried these 60s. I said that a few times. We couldn't break these 60s. That kept my bullish perspective. Up we go. Where are we going now? 2,400, 2,450, 2,500. Who the heck knows? I'll show you one thing I'm following with on the S&P 500, though. Go SPX 500 on the index on a daily chart. All right. How high could it go? I don't know. But realistically, 2,480 is realistic. It's doable. It's feasible to imagine that. That's the channel bound or the channel range from 2015. We tried it here a few times. We had that crash on the Asian news in August from the China rate fix. Then it bounced back. Terrible January, February, rocketed higher, haven't looked back. Trump presidency, and then upwards we go. So we're continuing on an upward swing. I can tell you this, we're getting to the kind of angle here that it's not going to go like this forever. I know that some people are going to say, if I buy it today at 98 or whatever it is, all right, and I come in here and I buy it, and if I just make this much again, it's going to happen. Every single tick that it goes higher, the harder it is for the next tick to go up, because the dynamic you have to understand is what it takes for a market to go up is for shorts to get squeezed, which is buying positions. Shorts getting out of their trades is buying, right? They're buyers. Shorts are buyers. So more buying is going to come in, more buy stops, more money is going to come in off the sideline, and there's going to come a point where we're going to get to a level where all the money that's available is spent, and it's all in equity. Then what? Then who's going to push this thing higher? That's the question, and that's the moment we're coming into. But don't look to be right. I could tell you one thing. The one piece of advice I could give you is don't look to be right. I'm going to share one of my personal favorite stories with you on YouTube in the next couple of days. I'll actually show my face. I'll go on camera and I'll share that detail with you guys. I want to tell you a really good story and I'll help you out with this stuff. But I can tell you this much right now. Be careful. Be careful trading, because the upside is not as easy as it looks anymore, and the downside sure as heck is risky. All right, let's look at some more data. That's the equities that continue higher. Trump, it's not what he said, it's how he said it that excited the market. All right, there were some clues in there as well that are positive for the economy on the Trump front, but he lacked detail. Anything he says lacks detail, and I could probably tell you it's because he doesn't know what's going to go through. All right, he doesn't know what they're going to agree on. So the way the market interpreted this is him having a really nice speech, him really being coherent, not ranting, not blasting the media. All this means is, you know what, he's probably a guy that Congress could work with. So now that gives the impression that he's going to be able to pass his legislation more easily. He's got people on board. They're drinking his Kool-Aid. All right, so this speech was necessary to get them on board, and the market is saying, all right, his likability just went up. Support just went up for him from the Democratic side. Let's go higher. All right, that was the significance of yesterday's speech. That's all it did. In the market, you often look for a cue that'll tell you, now buy it because of this. I always get this. Why did it go up? I don't know why it went up, but I'll tell you what, it usually goes up on rumor, and by the time that news is accepted, it'll go down. When his tax plan actually gets passed, we'll probably have a little bit of upside, and then we'll get hammered because everyone's already in. Everyone's anticipating that. It's like Brexit. It's like the election itself, everything. When you go into a top on a mass amount of hype, good luck. That's a better short than it is long. I'm going to end it there. Trump in the rally. Look out above 23.99.75. It's coming right now. A lot of offers already building up at these 99 halves, quarters. I see a ton of offers sliding in on the ladder. Follow it. And I can tell you one thing. This is a great market to be a trader and an investor, but probably better to be an investor. Trading the upside is not as easy as it looks. Believe me. It's a harder trade to trade the upside than it is the downside. That's when you've become a trader. All right, what are we looking at now? Let's talk about a few things. Oil today absolutely got annihilated. I got a chance to get a nice short on there, about 2K in the green on that position, but I got a chance to slide into oil and hit it really hard at 34, so 54.34. Inventory came out, and there's a record API inventory and DOE build. Like storage crude is a record on the total amount. It continues to climb. We have a record amount of inventory during a production cut, and that's what oil didn't like. All right, initially the build was smaller. The build that was actually announced today on Department of Energy's report at 10:30, it was a smaller amount than expected. It was 1.5 versus 2.5 million barrels, but it's a cumulative total record inventory, and that wasn't good. Oil didn't like that. We went in really bullish into that release, and I just hit oil and I shorted it, and I just stood on that, sat on it, and just brought it down. So there we go, above 54. We've had some time. It looks like the inverse of the ES. Now we got a lot of wicks. A lot of buyers tried it up there. They're probably stuck over the last 2 weeks. Now you can probably run their stops. I'm saying 53 on oil. Now, I was telling you guys to get short gold around 60. I was looking for that trade myself. Didn't pull the trigger. That was a great trade. I knew that drop was going to happen, and I'll show you why. If you look at gold seasonality, look how amazing this stuff works. I'm not just making this stuff up. Seasonality, I said, at the end of February, early March, be careful, gold gets weak. In the last 5-year seasonals, that's what it said about the trend. And I don't know who listened, who didn't, but I guarantee you people bought above 1260. They bought the breakout. Now they're stuck in that trade long. They're going to add more. They're going to chase good money after bad, and they're going to blow out their account on this down move. So be careful. I think gold right now is downside skewed. I think we got sell-offs coming. I'm going to start to sell into the rallies. Okay, seasonality's changed in gold. And you can't expect it to get long until July or August again. So we got a lot of trend left to get in on board. This is the beginning of the downtrend. You can even wait for the dip, retrace, and then short it. That's gold. All right, dollar index is ripping higher. All currencies are weak against the dollar. We've known that for quite some time. You can see the sell-off. This is a 5-minute. 1 second, my screen's blacked out. Let me go on a 1-hour chart. You can see the dollar, the USD is the purple line. Okay, it's been strong, and while it's strong, the one that's really gotten clobbered the most is the euro. So being short the euro, long the dollar has been the trade kind of on the last couple hours. But you can see bids are starting to come back. So what I want to show you here is currencies are range bound. They're more fixed and sitting in a range. Yeah, there's some movement, mainly against the US dollar higher versus the Canadian. There's some movement there. In a range on a daily, euro stuck in a range in a daily. There's up movement, there's down movement, but no one's really getting anywhere. All right, the only thing right now winning is equities. What does that tell you? That tells you money is plowing into equity and selling off everywhere else. Look, bonds sold off hard. Bonds got clobbered. Why? Funds are selling bonds and jumping in the equity on trade. So that's what I want to tell you. There's a massive asset allocation happening here, or reallocation, and it tends to happen at the end of one month, beginning of the other. That's where mutual funds, institutional funds, they all start to reallocate. Bonds went up, so they have to sell some bonds in order to plow that into equity. As equity started to fly higher, they allocated more so they could make those gains to the upside. One thing, there's only one thing worse than losing money in this industry. It's not making more than the index, especially if you're a fund manager. On that note, I don't know if you guys know, Ray Dalio, one of the most successful hedge fund managers, has stepped down as co-CEO. So he's no longer going to be in charge of that fund. Bridgewater Associates, massive fund. Hedge funds have gotten slaughtered this year. Why? Because they're also shorting this thing. All right? What you have to realize, guys, is stop fighting the trend. You got the Federal Reserve printing free money, supporting this market. I don't know if they do a hike anymore in March. It looked like a live meeting. Now we got to see. We got to reevaluate. We got to listen to speeches, back to the drawing board. With the dollar so strong and equity markets ripping, who knows if they do a rate hike? All right? The strong dollar is not helping their cause. That's where they're concerned. Okay, volatility back to 12. Bonds are getting crushed. Don't fight this thing. I'm not saying buy it right now, way too late, but wait for a dip, wait for some retracement, let it rip higher. I think we can continue higher until May. Seasonals on equities, strong into May. Sell them, get away from that point, come back in September. That's the best trade for a rotational strategy. All right, that's all I got for you for today's market analysis update for YouTube. Again, I just want to reiterate, go to TRADEPRO Academy. Dow's getting pumped right now. Wow, it's getting slaughtered hard. Look at this. We ran into, where did we hit the highs? 98 halves, 98.75. Couldn't even hit the 99s. You go down. I have orders posted at 99.75, 24 even. I'd love to short it there. Dow's getting hit right now. Be careful, guys. Like Dow's the yellow line. It's getting weak. Other ones are curling over as well. You want to try a short? It's coming up soon. All right. I think we find some support right here. These 95s on buying balances shoot up. And we'll try them short up there. All right, YouTube, I just want to remind you, check out tradeproacademy.com/free trial. Get on the email list, because at the end of this March, I'm announcing something big, and I want you guys to be part of it. And I want you to have the opportunity to take advantage. I'm telling you, it will never come around again. I hope you get on board. Also, check out the interview on drinkforex.com. Take care. Have a phenomenal afternoon. We'll see you in tomorrow's midday market update. Subscribers, hang tight. I want to show you some trade ideas for this afternoon, and we'll look at gold, copper, natty gas, and a few other things, plus the inventory thing I told you about. I want to dig into it a little bit deeper. Take care, YouTube. All the best. I'll see you tomorrow.